Hello there, what's going on, traders around the world? This is Mohammed Kande coming at you with some quick technicals on Australian dollar and the Japanese yen, AJ, Audjpy, whatever you like to call it. Just wanted to break it down real quick, take a look at what's going on. The yen and the Swiss franc have been just off the charts, early on this week, and those are safe haven currencies for a lot of people that don't know. So the yen is a safe haven currency, meaning that when there's some shit going on with the dollar, when there's some shit going on with the euro, when there's some shit going on with the Great British Pound, especially the dollar, everybody runs to the yen. When there's some crap going on, everyone runs to the Swiss franc. I'm sure you guys have heard about all the banks and how you can hide money in Switzerland and all that good stuff. Well, you know what? There's some truth to that. The Swiss franc is a safe haven, just like the yen is a safe haven. So oftentimes when countries are having a misunderstanding, like right now with the trade talks with the United States and China, you're going to see a lot of strength with the yen. You're going to see strength with the Swiss franc because those are safe haven pairs, and people run to those. Because you know what, I'm gonna trade the yen, I'm gonna trade the Swiss franc because there's no BS going on. It's clean, it's cut, and it's pretty clear. So that's what's going on over here. But nonetheless, let's take a look at Audjpy. At the end of the day, technical analysis are going to trump a lot of that stuff. Anyway, in my personal opinion. So let's take a look at it and see what's going on. So we've been in a crazy downtrend since October of 2014. Market has done a few pullbacks here and there, right? We've had some pretty good pullbacks in the meantime into the market, right? Market has done some really good pullbacks right here, right? Tap the trend line again, and then we've had a nice little downfall right here. And this is I don't personally like to use a lot of indicators. One thing that I do like are the EMAs. The EMAs 20 and 10 on a daily, and 110 and 40 on anything lower than the daily. Anything higher than the daily, anything the daily or higher is going to be the 10 and 20 for me. What I like is that the EMAs are diverging right here, meaning that they're expanding. They're moving away from each other. The more the EMAs move from each other, the stronger the trend is. So that's something to always keep in mind as well. And if you guys take a look, this was actually a textbook play. I don't trade this pair very often, but I do trade it every once in a while. But I did miss this. Look at this. Market pulled back into the EMAs, right, last month, created a pin bar off of my support and resistance, right? So market broke this area, broke the support, came back to retest it as resistance for 3 months. 1, 2, 3. Fourth month, we finally got a pin bar, and after this pin bar, the market just dropped. I mean, from the beginning of the month, there wasn't even a pullback into the, because the market had already been retesting this resistance quite a few times, you know what I mean? So at the beginning of this month, the market just plummeted, man. Whoever would have got into this trade would already be up about 70 pips. So really good setup. But let's take a look at it long term. Let's take a look and have an idea of where the market is going. This is what I'm thinking, right? You have a very strong area, very strong structural area at 74.55. So if price were to switch around, it's going to be at this area right here, 74.55. If anything happens with the price, this is where it's going to be. If anything happens, it's going to be in this area right here. So for all the guys, putting their bullets in their guns, getting ready, this is the area of sensitivity. This is where you look for price to change. Okay, so let's break it on down to the weekly. Take a look, have a better look at it. So if you guys take a look, even on a weekly, you'll see that the 74.46 area is absolutely amazing. It's extremely strong. It's like a rubber band. As soon as it gets here, market pops back up. As soon as it comes down to this area, market pops back up. And every time price touches the 74.46 area, prices shoots all the way back up to the 88.60 area. So for all my swing traders out there, that's some really good information to know. You know what I mean? Since 2010, every time prices come to this 74.40 area, prices always shot all the way back to the 78 to the 88.69 area. That's 74.46 to 88. That's 1,400 pips. That's a beautiful swing trade. Beautiful swing trade. Few months and you're there. Absolutely amazing. So let's break it down even further. If you guys take a look right here, this is that pin bar that I was talking to you guys about. Market pushed up at the beginning of April, and then towards the end of April we had that push to the downside, and of course that's created like a strong effect. The market has been pulling back. You know what I mean? Pushing back to the downside. And it's all off of this leg right here. So if you look at this right here, right? Market pushed all the way down. We had this crazy pin bar right here. Market pulled up to the 61.8, you know, and it found very strong structure there. And if you guys take a look, always look to the left, man. Look to the left. Structure leaves clues. So if you take a look right here, right, this is a strong structural area right here. So this is the area where price came into, and of course it was very strong in the hell, and price shot back down. Price didn't like it. You know, going with the trend. The trend is your friend. You already have a downtrend. Boom, price shoots all the way down right here. Market spikes down, creates a pin bar. Price moves back up to the 61.8, and then we get a drop again. So this is an ABCD pattern as well. So for people who like harmonics, this is an ABCD pattern. So you have A, B, C at the 61.8 pattern, and D is a -161 expansion, right? Most people who trade the ABCD pattern, the ABCD patterns like to trade price back to the B point. It's a very safe side, and if you guys take a look at it, the B point is like literally right below my support at 74.46. And if you guys take a look at it, the B side, it is literally lining up with where price actually comes down to before it shoots back up. So that's absolutely amazing, right? I mean, if you take a look left, look right here, boom, 72.89. Price always comes all the way down to 72.89 and then shoots off like a rubber band. So if you guys take a look, you know, so trading this pair back to the 72.89 will be an amazing setup, amazing opportunity to get prices at 75.99 now. So 72.89, that's 300 pips right there that you have to milk off of this pair. And I have a feeling it's probably going to happen this month. So you know we're going to get all of that this month, and we're going to get that market to rubber band back up. And if the market rubber bands back up from this area right here, you know what I mean, our first take profit is going to be back to this trend line, because this is a very strong trend line. The trend line has been there for quite some time now. So if the market comes all the way down here, you know, 72.89, we're looking to drop the market all the way back to 78.98. And then of course, once we get a break of this, you know, we catch that pullback, and then we're going to ride it up to 88.60. So beautiful setup. This is what I'm looking for. You know what I mean? As long as nothing crazy happens, you know, with the yen, or nothing crazy happens in Australia. And even if it does, you know, 9 times out of 10, technical analysis is always going to fall in line anyway. So you don't have much to worry about. I usually tell people, you know, no matter what the news is, no matter what happens, you know, technical analysis always falls in line. Look at all the trade talks with the U.S. and China. Well, look, if you look at all the Japanese, all the yen pairs have been downtrending anyway. If you look at CAD-JPY has been in a downtrend, you know, so the market pushed down. If you look at EJ, Euro-JPY, the market has been in a downtrend, so the market pushed down. So no matter what's going on in the market, you know, the news will respect technical analysis. So if technical analysis is the only thing that you used and you didn't watch for the news, you will still be fine if you got into the market at an opportune time. So that's something to keep in mind as well. The greatest example that I like to give people is Brexit. When Brexit happened, all the Great British Pound pairs were literally most of them had pulled back to the 61.8 Fibonacci retracement in a downtrend off of the weekly. Go back and look at GJ. Go back and look at Great British Pound AUD. Go back and look at Great British Pound USD. All those pairs were trending down. And then when Brexit happened, the market just pushed down even further off of that 61.8 or off of that 78.6. Go back and look at it. So the news will respect technical analysis. You know what I mean? The news will respect technical analysis. Every once in a while, you have the news come in and change the complete direction of the market, but that does not happen very often. To be honest with you, I've been trading, you know, Forex about 5 years now, and I haven't seen it. I haven't seen big news to just completely change the overall trend on the weekly or the monthly. I haven't seen it yet. I mean, Brexit would have been the biggest thing that I've traded since I've been trading, and that didn't happen then. So, you know, I'm pretty confident that you guys are going to be all right if you just trust and follow your technical analysis. So let's push it on down to the daily, man. Let's find a very good opportunity to get into the market here. So Market right off the back started pushing hard. You know, after a strong push, you're always going to get a pullback. You're always going to get some exhaustion. So definitely be looking out for that. After a strong push, you're always going to get some exhaustion. So be on the lookout for that. Be on the lookout for that. You're going to get that. So I'm thinking I want price to push back up to the 76.88 area, but let's push it on back to the H4. That's where I like to perfect my entries personally. And if you take a look at it right here, the H4 tells us a completely different story. So look, market has been, that gap filled, boom, and then price just shot back down. We had a pullback and then boom. So this will be 76.41 would be a good area to get into the market. This right here. The market has been respecting these zones right here. The market has been respecting these zones right here. So this will be a good zone to get into the market. And if the market blows past this zone, this will be your next zone right here, 77.12. You know what I mean? So I feel like the market, I can definitely see a pullback sometime this week, unless the yen is just so strong that price just travels, you know, 150 pips to 74.46. But that's truly not the Australian dollar and Japanese yen don't necessarily move like that. So I highly doubt that would happen. But it's the market, right? You're not 100% sure. Anything can happen at any time. So just keep an eye on it. And I hope that this helps out everybody that that's thinking about trading AJ. And I hope that it provides some clarity as to what's going to happen and what to look forward to. But I'm definitely excited about the market coming down to the 72 area, because once it comes down to the 72 area, it's game time. And personally, this is where I'll be looking. This is where I'll be patiently waiting for the market to get to, because that's a better risk to reward. I can risk 100 pips and I can get 1,400 pips. That's a 14-1. So that's what I'm looking forward to. All right, traders, I hope that this is of value to you guys. Any questions, don't hesitate to drop them in the comments. Don't hesitate to send me a message, and I'm here to be of assistance and of value to anybody who needs it. Thank you, and great trading week for everybody.